I don't expect a whole lot from him in his speech in terms of where they're going to be moving, at the next meeting. We have to keep in mind that there's a whole another set of jobs data, another jobs report, but also, more inflation data that comes out. We'll get CPI and PPI before the next decision. So both of those reports have a pretty, significant, I would say, probability of changing the Fed's direction in either way. I mean, you could get another really cold jobs report with strong revisions to the downside that would probably solidify, definitely a 25 basis point move. It would probably bring 50 basis points back onto the table, at least for discussion. But if you get, vice versa, a little bit of a reversal in the labor dynamic, and the labor market looks like it's holding up and it looks mostly like it's just a supply story, a lot of Fed officials and voting members, importantly, have pointed to that, where you can have a relatively low run rate for payrolls, meaning we can create fewer jobs each month, but not necessarily see the unemployment rate spike higher. That would shift a lot more focus, if not all of it, to the inflation side of their mandate, which, as you pointed out, in the minutes for this meeting, which I should emphasize, came, this happened before they got the report, the jobs report for July. But even in that meeting, they were discussing being further away from their inflation target, as opposed to their, labor target. So I think that's an important thing to keep in mind heading into this and then heading into Powell's speech, is that there's still enough people on the voting committee that have been pointing out the inflation risk. Those who have been pointing out more of the labor risk, that growing chorus of voices has been mostly, on the non-voting side. Not, of course, Waller and Bowman have been in that camp. But I think that's an important distinction to keep in mind, especially as we think about the setup for the vote heading into September.